Hello, my name is Sandy. The 5 reasons you should be in AgriStability are: 1. Whole farm protection. This protects your farm income based on all of your commodities. 2. Unique coverage. Coverage is based on your own farm history. 3. Payments in times of financial distress. Provides assistance to producers who experience margin declines greater than 30%. 4. Access to other credit options such as the Advance Payments Program. And number 5. Affordable coverage. It is a low-cost risk management program available to all producers. It is based on your own 5 years of history. The history comes from your income tax that you filed to the Canada Revenue Agency or CRA. We have your list of allowable income and allowable expenses. The difference between allowable income and allowable expenses is your margin. Our next step is to account for the inventory, receivables, payables, and purchased inputs, which are called the accruals. This is why we ask for the supplementary forms. In this example, inventory has dropped $40,000, which is subtracted from the total as shown by placing the number in brackets. Receivables are down by $1,000, payables have decreased by $8,800, but as usual are added in the final total. And the purchased inputs have increased $10,000. As a result, we would subtract $22,200 from this year's cash margin. The reason for the accruals is to account for all the revenue and expenses related to the farm in that year. The accruals are required in the current year and normally needed for the 5 years of history. However, producers may have the option to exclude the accruals for the 5-year history, reducing the amount of information needed to participate in the program. What we do is take the Olympic average of the 5-year reference margin. Olympic meaning drop the high, drop the low, and average the other 3 years. And compare it to your current year margin. We will show you more on this shortly. With the information we have acquired, we look to see if you have expanded or decreased your farm in order to make the margins equitable. Structural change assessments are a routine part of the annual program year benefit calculation. If applied, structural change adjustments are intended to adjust historical production margins to reflect changes in a participant's current farming operation. Typically, these adjustments result from a change in the size of the farm or the commodities being produced. In situations where productive units have not had a material change, structural change adjustments will not be applied. We have looked at the tax, the accruals and the structural change, and will now look at the totals to see if you qualify for a AgriStability payment. Now that you know how the applied reference margin is arrived at, we will look at how the program works using this silo to explain the payment calculation process. We have already established that the applied reference margin in this example is $500,000. The benefit trigger point is 70% of the applied reference margin, or $350,000. We also previously established the program year margin was $25,000. We take the $350,000 minus the $25,000 equals the eligible margin decline of $325,000. Now we get to the actual benefit to the producer. AgriStability pays 80 cents of every dollar of the eligible benefit decline. So the benefit in this example would be $260,000. I hope I have answered your questions on AgriStability. If you have any other questions on AgriStability, please don't hesitate to give us a call at this number and we will ensure your questions are answered.